S&P 500 is at all-time highs. My friend reached out to me. Should I buy right now or is it the top? I told him, stop looking at the index. There are multiple opportunities. Google, AMD, SoFi, Meta, Microsoft, and Salesforce. I'll discuss pros and cons of each company and my price target. Let's talk about the social media king, Meta. Meta survived the 2022 trough and went from 23 billion in profit in 2020 to more than 60 billion in 2025. The family of apps contributes 99% of Meta's revenue. Meta's PEG ratio is also around 0.87, which makes it undervalued. Meta is on path to reach more than $230 billion in revenue in 2026. Its net margin, the actual profit, sits around 28 to 32%. If we assume Super Bowl case, its revenue grows by 20% year over year for the next 3 years, that would mean its revenue in 2029 will be $410 billion. A net income margin of 35% would mean the profit will be $143.5 billion. And if we give it a PE multiple of 25, price would be around $1,600. Its core is spending heavily on data centers, chips, and AI, more than $140 billion this year. SoFi. I have a position in SoFi, average price of around $11. Its revenue has exploded from $1 billion to $4.7 billion within the past 5 years. Its projected net income for 2026 is itself around $780 million. Its major legacy customer, Chime, left them last year. If it maintains a 30% cumulative revenue growth and achieves margin around 20%, then it will hit more than $10 billion in revenue and around $2 billion in net income. If we give it a 30 PE multiple, that would mean the stock price will be $49. It fell down because people were expecting it to raise guidance, but its guidance remained the same in Q1. Some of the risks also involve macro and concentration in personal loan space, although SoFi is trying to diversify. The lending segment is contributing to majority profits. Now let's talk about Salesforce. Its revenue has doubled from $21 billion to $1.5 billion in 2025. Net income went from just $1.4 billion to a massive $7.5 billion. Agentforce ARR hit $800 million, which is up 169% year over year. Data 360 reached $2.9 million. It's shifting from per human user to per AI task revenue. It's slowing growth, but profit margins are exploding. Management has guided for the acceleration in 2027 because it's betting big on Agentforce. Revenue from agentic might not catch up with replacing humans. If they continue to grow at 12% revenue growth and 25% net income margin, its net income would be around $14.5 billion in 2029, which means EPS of around $15.2 in 2029, and hence stock price at a 15 PE ratio will be $228. This is a marginal increase because we're giving it a 15 PE. If we give it a 25 PE or even a 30 PE, that would mean the stock price will go to more than $400. Depends on how the market will value Salesforce. If it's around 15 to 20 PE, the upside, in my view, is limited. Hold a position in AMD and have an average of around $105. Within past 5 years, its revenue has more than doubled to $24.6 billion. But this is just the beginning. It's projected to grow more than 35% CAGR in the next 5 years. Its data center revenue was up more than 57% this quarter, year over year. And its server CPU share hit a record of 28.8%. Based on Lisa Su, it's gonna grow further. MI450 is coming in second half of this year. That is going to be a threat to Nvidia's power. Lisa Su sandbags projections and always beats on revenues and estimates that the company provides. So in that case, their revenue will be more than $80 billion in 2029. If net margin is around 28%, that will mean more than $20 EPS. Its PE holds a multiple of more than 50, which it highly likely, if it continues to grow, then it's projected to reach more than $1,000, which is more than double from right now. Any supply bottlenecks are a risk to AMD. Google. From 2021 to 2025, Google's revenue has surged from $257 billion to more than $400 billion. Its net income has nearly doubled from $76 billion to $132 billion. Google search is still growing at 19% year over year, as per the Q1 reports. Google Cloud is growing massively. It's now at a 20 billion quarterly run rate. Moreover, there's more than $460 billion of cloud backlog. This backlog doubled within the last 3 quarters itself. Apple's Gemini deal recently happened, becoming the default AI layer for iOS, and showed its ad ecosystem remains dominant on the mobile for at least next 5 years. Google services, that is search, YouTube ads, generates 38 to 40% of operating margin. This is the bank that funds everything. Waymo, with it reaching more than 500,000 rides per week in 2026, are starting to assign a valuation to it rather than just seeing it as a cost. One cause of concern for Google: a judge had ruled in April 2025 that Google held an illegal monopoly in the ad tech space. Now, the Department of Justice is seeking a structural remedy, specifically the sale of Google Ad Tech Manager. Its current PEG ratio is 0.64. PEG ratio under 1 usually means the company is undervalued. 2026 projected EPS is 14.3. If we apply 30% CAGR in the next 3 years, by 2029, its EPS will 1. Even if we apply a multiple of just 26, that means Google's stock price would hit $800. That's more than a double within 3 years. Let's move on to Microsoft. In past 5 years, Microsoft's revenue has scaled from $168 to $260 billion. Its net income has jumped from $60 billion to more than $100 billion. Microsoft's PEG ratio is also around 0.84, which is less than 1 and hence undervalued. As per the latest quarter reports, Azure grew 40% last year. Microsoft's Azure is re-accelerating, and a recent jury dismissed a $134 billion lawsuit against OpenAI and Microsoft. Copilot is already growing 250% year over year since its inception. Moreover, Microsoft has more than $620 billion backlog. If we apply a 15% revenue growth over the next 3 years and a margin of around 45%, EPS will hit $26. This is as a super bull case where Microsoft reaches $780. Microsoft is spending heavily on data centers and AI. Microsoft is spending around $190 billion in 2026 alone. The S&P 500 is at all-time highs, but the tech evaluations are far from their highest points. As you can see from this chart put up by JP Morgan, 1 year forward price to earnings multiple over the past year, 23, whereas it was at 32 in October of 2025. The companies are beating Wall Street's expectations at a pace that we haven't seen before. With about 25% of the S&P 500 companies that have reported earnings this quarter, 83% have topped earning estimates. That stands well above 5-year average of 78%. Revenue growth is on track for its strongest levels since 2022. This means that the recent rally to all-time highs is backed by well-founded conviction in the companies in the US. If the rest of the earnings season delivers as expected, it would mark 6 straight quarters of double-digit growth. That's the longest streak since recovery from the financial crisis in 2028. If you like this video, please like, share and subscribe. It gives me the motivation to come up with more videos like this. I hope it helped. Thank you so much for watching.